the importance of timing and find your perfect trading window. So in this video, we're going to talk about the perfect time to trade specific to you. Once you've defined your trading window, you'll be able to take faster trades, catch bigger movements, and have more predictability around the time and the setups that you're going to get, which ultimately is going to result in better trading. So let's get into it in this class. Now, the first thing we need to cover is trading sessions. There are 3 primary trading sessions: the Asia session, the London session, and the New York session. Now, we're going to talk about the exact best timing soon, because there is ideal times throughout these sessions that have repeatable characteristics you can use in your trading. I'm not going to talk about specific times right now, because the timing and, of course, the best time for you to trade completely depends on where you are in the world. We're all in different time zones, and depending on where you are, the time will be different, and the best trading time for you is going to be different as well. But to sum it up, the Asia session is daytime in the Asia Pacific region. The London session is daytime in the UK, Europe, and similar time zones, and New York is daytime in the US and similar time zones. And the assets that you trade will also affect which session is going to be best for you, because different currencies move differently during different trading sessions. So the 2 considerations to think about first of all are, number 1, where are you located and what time are you going to be trading? And number 2, what assets are you going to trade? So to talk through assets real quick, when we think about major pairs and most minor pairs, so the most commonly traded pairs, these are usually best traded through the London and New York sessions. The list of pairs that trade great through this session are the ones on the screen. I'm not going to read them all out, but also Euro, Swiss franc, and any Swiss franc related pairs are going to be good in this time as well as Norwegian krona and Swedish krona pairs too. Now, these ones here generally will best move during New York session because they're primarily weighted towards Canadian dollar, which has more volume in New York than it does in London, but they will trade fine in London as well. Everything else is going to trade solidly through London and New York session, but they do slow down during the Asia session. So if you're based in Australia, Japan, or anywhere in the Asia Pacific region, these pairs are probably not the best selection for you, except maybe those including the Japanese yen. So if you're in the Asia Pacific area, you probably want to look towards exotics. These are going to be a good choice for you because they hold volume. They actually move more during Asia session. And some of those pairs to look at will be basically anything with Asia Pacific weighted currencies. So AUD JPY, NZD, NZD JPY, GBP JPY, USD JPY, and so on. As I said, these pairs hold volume through Asia session, so you're actually still going to get some movements here, whereas a lot of the pairs like Euro USD will just flatline and do nothing through the majority of Asia sessions. So the first thing you need to do is to determine your location, trading time, and the pairs that you're going to trade. That is step 1 to choosing your trading window. We've been through how to do that now. So where are you in the world? What time do you plan on trading? This is going to decide the session you trade and also the assets that you trade. And step 2 is to understand session characteristics, which are repeatable patterns that you will consistently see taking place a lot of days out of the week. And remember, we looked at this before. Well, this is a breakdown of the 3 trading sessions for the majority of major and minor pairs. So we have Asia consolidation. Generally through the Asia range, major and minor pairs will just move sideways. The London push, which is a drive in one direction as London session opens, and the New York reversal, which is where the market will flip during New York and actually move the other way. Let's go talk about why this happens and show you some examples of it on the chart. Right, we're going to quickly go through the different characteristics. I've drawn out this kind of model here. You should take note of this because this is what the repeated characteristics are going to look like. If you have this in mind, you'll pretty much always understand kind of what you need to be working with during your trading sessions. So this here is for major and minor pairs, which is pretty much going to be the focus of this video. The trick is if you're in the Asia Pacific area and you're going to be trading through the Asia session, you need to focus on those NZD, JPY, AUD focused pairs, and you will see more volume during Asia. But the majority of people will be trading through London and New York. I mean, even if you're in Australia, you can trade London session in the evening at around 7 p.m. So you can still trade these characteristics during that time frame as well if you want to trade major and minor pairs. So here's how it works. The major and minor pairs during the Asia session have low volume because during Asia, people in London, people in New York are asleep. The majority of volume that actually moves the market up and down comes from institutional trading. which means large firms, banks, and institutions with massive amounts of money that are actually creating large movements in the market, because it's market orders, buys and sells, that make the market go up and down. So you need that institutional buying and selling, considering they take up around 95% of the volume, to create the up and down moves. Now, with the majority of the London, New York, US, Europe-based institutional trading inactive during the Asia session, it creates a phase where pretty much the major and minor pairs, anything focused on Euro, UK, US, Canadian dollar focused currencies, they just move sideways. They don't do much. Now, this is what we call a consolidation, just a phase where the market isn't going up or down. And basically, during Asia, it's just going to be a bad time to trade the majority of those pairs. Now, we can use the Asia consolidation for something we call sweeps, and we'll talk about that as we get into London. So around the open of London session, early in the morning in the UK, we are going to see a drive of momentum on most days. This is where the significant movement is going to be for UK-based day traders if you want to trade the London session. Because we see this large open of volume, which is essentially when UK and Europe-based institutional traders start placing orders or start messing with their orders, we are going to see a large drive in one direction or the other. So the ideal thing to do here, and this is a good thing about finding your trading window, if you are going to day trade London session, you want to be active around London open, because your goal will be to catch the large movement at the start. If you can get active in the market here, you're going to be able to run the market down throughout the high momentum move, okay? Now, the London push also usually, or quite often, does something we call a sweep. Now, as you can see, the Asia consolidation will pretty much create a sideways range. We'll take a look at this on a chart in just 1 second, which means you're going to create what we call liquidity at the high and the low. Liquidity simply refers to orders. Basically, if we create a range of highs and lows, we're going to have sell orders and buy orders above and below the market. Okay, above and below the highs and lows in the market, or above and below the Asia range, we call it. These orders are then often going to be swept both sides. Now, this doesn't happen every day, but it happens relatively often, as you're going to see in a minute. Often enough for it to be a repeated characteristic that's worth mentioning here. With this in mind, you would basically consider the Asia range as a target for trades or a target for entries. So if the market was to sweep above the Asia range, this would be a good opportunity for you to then start looking for trades to go the other way, to take out the liquidity under the Asia consolidation. So understanding that sweep is very valuable. Now, another thing would be if the market is here and it hasn't yet swept the high, but it's on the way to doing so, you'd be able to avoid losses by simply not entering trades at that point. Because if you enter a trade on the way into the highs of Asia, for example, you are probably going to get stopped out because the sweep is relatively likely to happen. It's going to happen enough of the time that you selling inside of the Asia range instead of above, or buying inside of the Asia range instead of below, is going to be a little bit of a lower probability thing to do. So understanding the Asia consolidation and the reaction there in London in terms of sweeps is very valuable, because you can obviously wait for the sweep to occur, wait for the high or the low of the Asia session to go before looking for your entries to your trades. Two things to consider then from the London session. It's very often going to sweep the high and low of Asia, and it's also very often going to create a nice higher momentum move with clearer direction and less of this sideways mess that we get during Asia. As we move into New York, so coming into the start of New York session, which in the UK is going to be around midday, 12:12 p.m.-ish is the crossover time where we see this characteristic of the New York reversal. Now, sometimes the New York reversal is actually going to be extended as a kind of New York continuation. So if we have this as our Asia range, and then we have our London push here, sometimes New York could actually just follow through as a second continuation, okay? But enough of the time for it to be a repeated characteristic, it will create reversal instead. So the reason the New York reversal occurs is obviously now we have the New York, US and Canada-based traders and institutions activating orders and getting involved in the market. This creates a big new drive of momentum, which can of course go with the direction of London, but quite often will go against the direction of London as London-based institutional traders wind down and New York kicks in with a whole new run of momentum. So a good way to trade New York is around New York Open. you can start to identify changes in the structural direction of the market. So if we were to see the London trend reversed, if we had a downtrend in London, for example, and it started to break higher into higher highs during the open of New York, we could then look for pullback opportunities to provide buys for us so that we could take this market higher, right? That is how you would generally then trade the New York reversal. Now, of course, if New York didn't make new highs, we could instead look at this as a way to just continue taking the market lower, okay, as a kind of New York continuation. But enough of the time we are going to see that New York reversal taking place for it to be considered as a, meaningful characteristic, okay? So as we come to the end of the New York session, whether it's been a reversal or a continuation, we're going to see the market slow down, which is basically where we start to lead back into the Asia consolidation. So this is like an endless cycle. Asia consolidation, London push, New York reversal, slow down. And then we go into Asia consolidation, London push, New York reversal, and then slow down, okay? So that's the general characteristics of the market. And that is how you are going to be trading them and choosing your best time window. So talking about the trading time windows then, if you are in London, you really want to be around the open of London session. You generally would want to see sweeps of the Asia high or low. If you want to trade New York session, you will be looking to the open of New York, the crossover time between London and New York session. And for the majority of cases, you're probably going to be looking for reversal trades, though you would generally just want to continue moving with whatever the existing trend is. If it doesn't break, keep taking it lower. You may get that kind of New York continuation. So with that said, that's the diagram. Let's go look at this on real chart.